Hi everyone, I hope you had a wonderful weekend. Welcome back again to another trading week. I must firstly apologise. It seems that some people were not receiving the market update video links. There seemed to be a bit of an issue with the automatic update or uploading for the videos up to YouTube, so now it looks like I'll need to continue to do it as a manual upload. But anyway, I hope you had a wonderful weekend. I'm now going to try and get these report on all the currency pairs within the same video, so you don't need to keep moving around to separate video links, and that means I'll need to keep it under 10 minutes in total for the whole video, as that's YouTube's limit, and so I better get moving along. Now, first currency pair I would like to look at this week, which is Monday the 28th of February 2011, is the Aussie dollar. As you can see from this daily chart, that this market has been going quite very much sideways since October last year. There's it really has moved along up and down from the price level around parity, around the $1 mark. So it's been a fairly tricky market to trade. Starting on the new cycle from this point here, we have moved up with quite a nice rally up and out, with a fall back as we expected at that time, with some consolidation through there, and then the market broke out of a consolidation pattern and it has sort of moved sideways once again. Now, just late last week, the market actually broke up and above the previous swing high, but the areas to watch is the breaking above this previous high here, as well as the actual peak at the beginning of the cycle there, because at the moment that is being is showing as the cycle crest. We're also in the midpoint of the cycle, which means we really don't want to be taking long positions after this point in time, because it looks like the market could soon very well topple over and head down into make its cycle low, regardless if it's going to be bull or bear. We may, if the market sort of breaks above this 1.0251 level, we might start to take some very small long positions, but until that time I'm just going to be sitting really on the fence, because it's not really giving any indication that we're going to be dropping, as it's broken up through this previous peak here. I would have liked to have seen it turn. If it was going to head downwards, I would have liked to have seen that turn prior to breaking through that previous level of resistance there. So it's just a matter of sitting on the sidelines for the Aussie dollar, and possibly only some intraday trades, small intraday trades on that pair, but otherwise it's just a matter of sitting and watching and waiting for the Aussie dollar. Okay, looking at the euro dollar, we've had the start of a new trading cycle with a bit of consolidation, with a strong pullback, which actually found support on the 33% price extension, and before it started to rally upward again. We actually did have a long position. We had a small intraday position, a short position, and two long positions, so the short position was actually hedged, but unfortunately this strong blue bar here, which was 175 pips in range, actually stopped out our long positions, and we've missed this next movement upwards here on the euro. We did on the robots though, they have been capturing some good moves on the intraday. This is the hourly chart, and they've been doing some nice little trades on the hourly chart. That's why I like using the robots, that they can sort of take advantage of that volatility, whereas the the longer term trading system sort of can get the stops hit, and it's not that much fun. So we've had the break above this downward flag pattern, and it's finding some resistance at the double top here. It's a short term, so what we're waiting for is it to take out this previous high and either move upward, but the significant levels I'm looking at here is this 66 percent price extension, as well as this purple line here, there should be quite a lot of significant resistance found there, which will likely turn this market down. So we're just really waiting and seeing where this is going for the shorter term. But longer term, I do believe this market's got a fair way to fall. Looking at the USD CHF, we have a current short trade on this market. As you can see, we're in the time band of this market making a significant low, and when they do drop into these lows, they do drop quite quickly. So we had an opportunity to start shorting the market around about here, and it's just a matter of we've taken profit on that position now. We will be moving the trailing stop up to in front of the entry position or level, entry level, so that we that next half of the position does not stop out at a loss, and that stays as a profitable trade. But we also don't want to get the stop loss too close, because as you're aware that the markets can be quite volatile, and you don't want to get the stops again too close, otherwise you can still get the direction right, but you can realize a trade at a loss, because the market gets stopped out, and then you have a loss, and then the market turns around and goes into your direction, which is extremely frustrating. So we're going to sit on this position for a little while and hope this market keeps dropping so that we can continue to profit with that one. And it's nice to try and stay in the position as long as possible, because if I scroll up the screen here, you can see the longer term time band as well, where this market is expected to really head down into the low. I'll just squash this band up. So we could certainly see the CHF fall quite a bit further against the USD, and these longer term cycles are what, or this longer term cycle here is what is bringing it downward. So it's a matter of sitting tight in this position and riding it for all it can, because as you've seen previously, these markets can really fall, and that's when you can make most of your money on the one trade. Now the yen has been, or the USD JPY has actually been quite frustrating for me over the last, or this current trading cycle that it's in. Moving it up here, as you can see, this was the start of the cycle. It rallied up, and it's just absolutely been moving significantly sideways and not really giving any clear direction. It's at the moment within the time frame of the end of its cycle, which, if this is the cycle crest up here to the left hand side, or to the mid and the left, and this is the start here, we should see this market falling below if it's a bear cycle. But what really started to take shape here, or different form in the cycle, was that there was a rally upward. We saw higher highs and higher lows on the way up, and then the market has once again slammed downwards. So it's quite a messy market, the USD JPY at the moment, and making it extremely difficult to trade. And I mean, it would be very nice to be able to get into this market short should we see this market start falling down below the start. So it's sitting on the sidelines for this pair, and waiting until we start seeing a little bit more trending behavior, because that is a lot of sideways and extremely volatile moves, which has been very, very, very hard to trade. So over and out for this week. Enjoy today and the rest of the week, and I'll talk with you again next week. Bye for now.